Hi everybody and welcome to another day with Serene Education. It's the 23rd of October 2012 and I'm just going to be starting with, going over the four majors this morning with you, starting with the euro against US dollar. Dailies, okay, let's have a look and see what's been happening. Let's have a look at yesterday's trading candle. Very indecisive. If you notice, we had Friday's close, which was lower from coming back off those highs that we saw at 1500 and pulling back to roughly around the price support and resistance level high here that we saw back on the 5th of October. So this evening star formation here, clearly price is now finding a bit of support here, a little hesitation area here, and that coincides quite nicely with that psychological round number at 1300. So as it stands now, the CTC is still very much upside favored. However, you can quite clearly see that 1500 is now our near-term resistance level. So we do need to see price breaking above that and trading higher than that to see any further extensions to the upside for this particular pair. The longer we find resistance at 1500, the more likelihood is we're going to see price reverting to the downside near term. So, and if it is to move to the downside, one or two things needs to happen. We do need to see a close and break, a break and close, apologies, below 1300 in order to see price moving to the downside. However, you can see near term we have this upside trend, a very, very strong upside trend that that price has been finding support on over the last 3 months or so. So we have support below us in two forms, or three forms if you take the 20 period moving average into effect as well. We have the 1300, which is a psychological round number. We have the 20 period moving average, and we have the trend line. Notice the institution moving average is well below price here at 1285, and as long as it maintains above 1285 long term, price is still looking positive, hence the reason why the CTC is still blue on either side. We do have all parts of our strategy in play, i.e. the four parts being the arrow, which is blue, candlesticks, which are blue, and the histogram on either side, which is blue. However, we are pulling back. We want to see the 1500 being broken to the upside to see any further opportunities of upsell. The thing we could do is look potentially intraday to see if price can maintain above 1300 or break the yesterday's high. So if we get above 13083, and then we could target near term the 1500 for the remainder of this week. On to sterling. This one over here, we know very well that there is a major support and resistance level in the shape of the 16300 mark. So let me just make that very clear so you guys can see it. Prior resistance here back in April of May of this year, and heading into its near term through September, we saw a lot of indecisive candles and head into this, and we had a nice little shooting star formation, a clear exhaustion candle, and then we saw the bearish engulfing candle, which actually constituted to the negativity, and price has been falling since. So pulling back, and we want to see roughly where it's been pulling back. So you take the all-time low here we've had this year at roughly around the low end of June, well, the start of June, to these highs here at 16300, and you can quite clearly see that 23.6 February retracements is the first port of call where price pulled back quite nicely too and had a nice psychological bounce on there as profit was taken. However, the sentiment still looking negative and price reverting to the downside. Traded under the 23 for a while, but you can quite clearly see the price broke higher. Hangman over here, but a nice bullish engulfing candle and price reverted to the upside, but capped by the downtrend here. You can quite clearly see that the swing low, swing low, swing low, bearish engulfing just near term, and we've seen price reverting to the downside yet again. Here again, you can see, as for the European euro against US dollar, finding support at that 1300, and here on this particular pair, using 1600 as a major support and resistance level. Psychological round number. Traders like these round numbers. Anything with a round number is far better than trading something with a mixed up digit count. So you can see quite clearly here a nice morning star formation on that price support and resistance level 1600, and we've seen exactly the same thing happening yesterday. Bearish, very bearish candle indeed. If you can see it, price moving lower and finding or trading at the lower end of the candle. So well into the 30% of this candle at the bottom here. However, still above 16300, above the 1600. If this is to be remained a major, if this is to remain negative long term, we do need to see this area here at 1600 being breached. Nice bearish engulfing candle would confirm that. We don't want to do the same thing over here, be selling into a major support, because we could see a bullish engulfing candle here, which constitutes to now to an even morning star formation, and then we would see price reverting back to this trend line, this intermediate trend line. Hence, the CTC on the other side is still looking positive, so we don't want to be taking that into effect. As you can see quite clearly, the 20-period moving average has been broken recently, and price is testing both the 1600, this psychological support and resistance level, plus the 50-period moving average. Okay, and a price support here. So very important that price breaks below that. Otherwise, look for a bullish engulfing candle, which would confirm this is now support, and this is clearly a support long term, and we should be targeting back up towards these trend lines. If you take the wick highs, if you take the body highs, do one of each, but if you take the body or wick, you're looking in this area around here at roughly 1610 or so. On to the US dollar Swiss franc. This pair, we know that prices found resistance near term at the 1,000 mark. The price over since August of last year has been moving to the upside, consolidating through most parts of the start of this year, and then breaking and moving up towards that all important 1,000 mark. Since hitting that, you can see a clear head and shoulders formation, nice shoulder here, followed by a beautiful head, and then a bearish engulfing shoulder here, and then price is just converted to the downside, and since then really moving with some momentum. I've taken the all-time low here in August and to the high that the current high that we've had this year, and I've drawn a simple retracement area, and you can see 23.6 price has been playing with this area just recently. Notice, however, if I just zoom out, you'll notice that like its European counterpart, the US dollar Swiss franc, you can see that the euro against US dollar, you'll see the US dollar Swiss franc in this case has now been trading below the institution moving average for the first time, or through September and October, and the last time we were actually trading above this area was back at the same time last year. So since October of last year, price has been quite bullish because price has been above the institution. Notice there's a lot of more blue than red, and now near term you can see price is now trading at the underside and finding resistance at the underside of the institution. And look at the CTC on either side, the histogram telling you we're potentially, well, we're very much so in a negative trend. Okay, there's more negative sentiment in this particular pair, and price has been moving lower. So you can quite clearly see how the intermediate trend near term has been very much negative, and hence the reason why we had lower swing, lower swing, lower swing, lower swing, lower swing. These two highs over here pretty much smack bang with each other as they came to retest this institution moving average. So 940, nice resistance level, and now you can see near term, nice breakout last week, and then the pullback, and you can see price yesterday in particular still finding resistance here at 930, so which constitutes to the 23.6 fib retracement area. So as long as 9,300 is above price and the institution and all the moving averages, then we should be looking for negative sentiment to be the order, and we should be looking for bearish engulfing candles. No buying, because you'll be buying into resistance. We don't want to be doing that. If you want to be buying into this, we would like to rather see price trading well above 930, ideally above 940, because we'll be above the institution, which would constitute that we would see more buying sentiment coming through, and then we should be looking at. Otherwise, near term, we are trading below a major support and resistance level here in the shape of the 9,300 mark, and because of that, we should be looking for bearish engulfing candles on a 4-hour, for example, at the underside of this to tell us we should be targeting back towards this prior low here at the low at 9,200. Okay, so for the foreseeable future, don't be buying against market direction, which in this case is negative. Rather, bide your time, be patient, look for sentiment. If that sentiment is telling you there's clear resistance at 930, then we've clearly seen what we call as a breakout, the pullback, and then a continuation, a potential continuation in the direction of the breakout, which is downside. Last pair of the day is US dollar Japanese yen, and what has been the order of this particular pair recently? Well, lots of upside movement here. The US dollar really against its Japanese counterpart, and finding a lot of support here just recently. Near term, we've seen a lot of support for this pair as she's been tackling the 78. Going sideways, one or two areas where we saw price breaking lower. However, the momentum to the downside, not really really keeping up with it. Here, Bernanke opening his mouth and saying, yes, they're going to come up with quantitative easing, and showing up people bought into that sentiment. However, not really propping it up, and we had an evening star, and then price reverted the downs again. However, people still favoring the US dollar against the yen just recently, and sure enough, price has been maintaining those highs above 78, and in doing so, pushing price to the upside. So as long as it's trading above 78, we should always be looking for price to move to the upside, and sure enough, you can see just recently over the past couple of weeks, price has really been moving to the upside, including yesterday. A lot of momentum yesterday, a lot of buying sentiment yesterday. However, that buying really taking us into a major support and resistance high in the shape of the 80. You notice that I pull back out of this particular pair over time. You can see quite clearly over, if I go way back till Last year in particular, the start of last year, you can see price finding a lot of support through here, resistance even after those the intervention through August of last year by the Japanese government, yet again through another one here just to start in November. But you can see quite clearly near term, price has been trading in this channel. The highs have got lower through the channel though recently, and just near term you can see all that bullish sentiment moving price to the upside. And in doing so now we can see price testing the institution moving average last week, had an indecision candle going into Friday, yesterday Monday, giving us that sentiment bang straight up. But if you wanted to, you could have obviously been profiting here for a nice close above 79.50, but you would have rallied straight into and taken profit here at 80 because that constitutes a major support and resistance level high. Got to get for this to remain, if the US dollar to remain positive against the yen, we do need to see price breaking and trading higher than the 80 soon and finding support here. If you can do that, then ultimately long term we should be targeting upside. And there's some near-term resistance here just above the 80.50. However, another one here just below the 8200. But all-time 8400 is our major long-term support and resistance level high for this particular pair. So near-term, looking for any trading opportunities. You don't want to be buying into a resistance level. Either look for a bearish engulfing candle intraday for a bearish Arami formation and look to target the downside potentially back towards 79.50. Or what you can use is use your fib retracement. Take the low here for this consolidation at 78 to the current high at 80, and you can see quite clearly that 79.50 is our 23.6 fib retracement. So get a nice bearish engulfing candle here, and then we could be targeting potentially near term the 23.6 as people take profit off the table for this particular pair. So one or two things here. Bearish engulfing candle would constitute that we should see a pullback, and we should be targeting 23.6, or a bullish engulfing candle break higher would constitute that we should be looking for long-term positiveness for this particular pair, and then we should be looking for an entry to the upside. That's it for today, guys. Short and sweet. And please, if you're following the rules of the CTC, please back it up with sound money management rules and follow the rules of the CTC. Don't break any of them, follow them, and all you got to do in that is to apply strict money management rules, and you shall become a winner. Other than that, if you have any queries about the CTC and you're new to trading, please drop us an email at info@sereneeducation.com, and we'll see if we can sort something out for you. Otherwise, we do have an introductory Forex course for those of you that are new to Forex trading and are to make headway into Forex trading. If you make your way to www.forexmadeeasy.com and have a look at that and see if that suits your needs. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, trade serenely.